The Strait of Hormuz is burning, literally. A Korean tanker is ablaze. Iran just struck an oil terminal in the UAE, and President Trump is promising the US Navy will escort commercial ships through one of the world's most critical choke points. If you think your gas prices are high now, buckle up. 20% of the world's oil flows through this waterway, and it just became a battlefield. Here's what happened. Reports emerged this morning that a South Korean flagged vessel caught fire while transiting the Strait of Hormuz. At nearly the same moment, Iranian forces launched what sources describe as drone or missile strikes on an oil export facility in the United Arab Emirates. The timing isn't coincidental. This comes just hours after former President Trump announced that if returned to office, the US Navy would actively protect commercial shipping through the strait. Iran appears to be sending a message: we control this waterway and will respond to any threat with force. The Korean ship's status remains unclear, but early reports suggest the crew evacuated. The UAE facility sustained damage, but the extent is still being assessed. Markets reacted instantly. Brent crude spiked nearly 7% in early trading, crossing $92 a barrel before settling slightly lower. West Texas Intermediate followed suit. Energy stocks surged. Exxon, Chevron, and European giants like Shell and BP all jumped 3 to 5% in pre-market activity. But the broader market is rattled. The S&P 500 futures dropped 0.5% as investors digested the supply risk. Gold climbed to $2,700 an ounce as traders fled to safety. The dollar strengthened against most currencies except oil-linked ones like the Norwegian krone and Canadian dollar, which gained on energy optimism. U.S. Treasury yields dipped as bond buying accelerated. This is classic risk-off behavior triggered by geopolitical shock. Who wins? Energy producers, obviously. American shale companies, Middle Eastern exporters outside Iran, Canadian oil sands operators, they all benefit from higher prices. Shipping insurers will see premiums skyrocket for vessels transiting the region. Defense contractors could see tailwinds if this escalates into sustained military presence. Who loses? Airlines already struggling with fuel costs, automakers facing another squeeze on consumer budgets, any business dependent on petrochemical inputs, plastics manufacturers, fertilizer companies. Emerging markets that import oil are particularly vulnerable. Countries like India, Turkey, and much of Southeast Asia will see inflation pressures intensify just as they were stabilizing. Globally, this hits Asia hardest. Japan and South Korea import virtually all their oil, much of it through Hormuz. China gets nearly half its crude through this route. Europe is less exposed but still vulnerable. About 15% of its oil comes this way. The US is now a net energy exporter, so it's partially insulated. But American consumers still feel global price moves at the pump. The UAE and Saudi Arabia face the immediate threat. They're within striking distance and their economies depend on uninterrupted exports. If Iran can credibly threaten their facilities, their risk premium explodes. Insurance costs for Gulf oil infrastructure could triple overnight. For jobs, energy sector hiring will tick up if prices stay elevated. But every $10 sustained increase in oil typically shaves a quarter point off global GDP growth, which means slower hiring everywhere else. Real estate, higher gas prices mean less disposable income, cooling housing demand in car-dependent markets. But energy-producing regions like Texas, North Dakota, and Alberta could see property values stabilize or rise as the industry rebounds. Watch three things. First, does the US actually deploy naval assets, and how does Iran respond? Second, how quickly can the UAE restore that facility to full operation? Third, what does OPEC do at its next meeting? Do they increase output to calm markets or hold steady to maximize revenue? The next 72 hours will tell us whether this is a one-off flare-up or the start of a sustained energy crisis. Stay informed, stay ahead. This is World Financial News.